Hello traders, in the zone here. In this video tonight, today made a great example for a lot of things. And so I wanted to go over those things and try to clear some things up for you. And maybe you'll understand the daily levels a little bit better. This morning we opened, you can see right here, we opened inside the lower level of the Camarilla, okay, between L3 and L4. And what you want to watch for here is, does it break out to the downside below L4, or can it get back above L3 and become a buy? Okay, so this morning it got below the L4, and of course you could go short here. And where would you put your stop? Your stop would be back above the L3 level. Well, another thing too is that this yellow line here is our A up, okay, line. And it actually is almost the exact number as the L3. So you know that if you were to confirm this A up here, then you've got two signals. You've got the A up signaling along, and you've also got the L3. You're leaving the lower level and you're going back into value, and you would expect price to push up to the H3 level up here. Okay, so that's one thing. So you could short here, stop up here, and this trade would have worked out really well. You can also see that right here we confirmed our A down. Okay, so the A down got confirmed in this area. Needs to spend at least 5 minutes here, and you can tell that price trades back and forth on both sides, and this is a very subjective thing. You have to come up with your own way of determining, has the A been confirmed, and that just takes, you know, some screen time and some experience to know when that A, because it does spend time above the line and below the line, back and forth, and you kind of have to decide. The biggest thing is you have to decide, is this price level getting accepted, or is it getting rejected? Okay, so right here is a confirmed A down, and of course this stop, if you're going to go short here, your stop would be a closing bar back into the opening range here, the white lines. This is the opening range. If you close the bar back into the opening range after confirming, then that's a good enough stop for me. Okay, but this one sold off. Nice little zigzag pattern, sold down to the low, and then we started to come back. Okay, and notice here how it paused again at this A down level. Okay, it paused here. And then when it came up to the L4 level, this bar shows a little bit of rejection, okay, kind of a big wick here, but then it was able to push back into the lower zone, and then it was able to push all the way up to the top of the opening range, and this would have stopped out a short from here, okay, because according to Fisher uses the top of the opening range. Okay, so now what happened this afternoon was we had a C up, okay, late day C up, and this is a very powerful signal. It basically says that most of the market participants are on the wrong side of the market, and of course in this case they were short, and now they're having to cover their shorts, and a lot of this is short covering. Now, one thing I know about these C ups, okay, so when it got here, this is a C up, and you can see it pushed up pretty good. Couldn't quite make it to the pivot range, and I'm going to talk about that pivot range in just a second. But then it pulled back, but look where it found support. It found support right at the top of the opening range, and now in the aftermarkets you can see that it's starting to push up. And I expect a gap up in the morning, and the reason for that is anybody who didn't cover their short today, and they see this little pullback here, and they're like, you know, I think I'll hold overnight. I think, you know, this rally was just, you know, false. And so they decide to hold overnight. Well, the overnight action will take this thing up, and it'll gap it up, and it'll put pressure on those people that didn't close their position. And so what we'll probably see in the morning is a gap up. it'll probably stay up, push higher for like the first 30 minutes or so to really squeeze those people that, refuse to cry uncle. And then it'll probably fizzle out from there. Okay, so that's what you're looking for to happen. And so you had the A down, okay, and then this is a C up, and it happened late in the day, and so that is a very powerful signal. Okay, now let me talk about the pivot range. You can see this pivot range up here for today was very narrow. Whenever you see a very narrow pivot range, that always should be an alarm to you. It should say volatility, okay? It's like a volatility index, okay? What usually happens is a large price movement day. Now, it doesn't all have to be in one direction, okay? If it can go in all one direction, but I see a lot of the times what happens is like this morning, we push down, 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 and then we get a big push back up. And that's all because of this narrow pivot range. It's just something that I've learned trading Mark Fisher's ACD method. And so whenever I see a very tiny, and when I say tiny, I would say, well, we have a lot of volatility right now, so this one probably doesn't quite qualify, but during normal trading, I would say 1.25 points or less, okay? And that qualifies for a narrow range pivot range. Now, today's is a little bit wider than that, but I think it still qualifies because the volatility that we have is so big that this is a tiny range. Okay, so that's how you want to be aware. Whenever you see a narrow range pivot range, realize that you're going to have some violent trading during the day, okay? Big swings. Or it could go trend day on you and just go in one direction, okay? So these are some of the levels that I use all the time, okay? I've got the Camarilla, upper level here, got the value area here, okay, value area here, and the lower level here, okay? Where we open tells me a lot, okay? And so I've got videos on the site to learn how to trade these. And then, of course, you've got the opening range, the white lines here, okay, with your A points, A up and our A down. And in this case, you can only have one A, so you had the A down, so this has to be a C up, okay? And it would, you can flip that on its head. If you had an A up and it came down here, this would be a C down, okay? And then, of course, the pivot range, and the pivot range always tells me, where did we close in relationship to that pivot range, and that gives me the bias for the next day. So those are the main things that I use for determining the big picture. Okay, just trying to just get a big picture of how the day is likely to play out. And like I said, it gets real hard because especially with the volatility that we have, to trade this. Like today, if you would have shorted here, this was 80. Let's say you got short at 44, your stop would have had to go up here at 58. So that's 14 points. Okay, that's a big stop. These are extraordinary markets right now with high volatility, and so what I have to do is I have to find different ways of trading. And I'm trying to trade with my Keltner channel, and even it is giving me a hard time. The bands on my Keltner channel are really wide, and so even it is giving me large stop outs. And so I've had to reduce my size and trade really quick and really careful. And so I'm happy. I'm back to the beginning. I'm back to the start. I'm back over my $50,000 start figure, and hopefully from here I can continue to have profitable days and start to grow this and grow it up to the 53,000 so that I can qualify. All right, guys, that's it, and we'll talk at you later.